Thank you for joining me to learn about the SBA 504 program. Active small businesses organized for profit and located in the United States are eligible for the SBA 504 program. We can finance startup businesses or existing businesses. They must be small per SBA size standards, which are actually, as I would look at it, quite large. The key is we have to look at the net worth and the net income of the applicant business and any related businesses. And that's usually found on the business's tax returns. So if we add up all of the net income numbers from the applicant business and affiliates, and if they're under $5 million in average net income for the last 2 years, and under $15 million in total net worth, they will qualify. We can also use alternative size standards based on the company's NAICS code. Those are tied to employee numbers and overall revenue. Typically, the net worth and net income limits will allow most businesses to qualify. Some small businesses are eligible for 504 financing that you might not expect. For example, we can do loans to cooperatives. However, that has proven difficult because we are required to take an unlimited personal guarantee of at least one individual. We can do financing for parking garages and mini storage facilities, which may not on the surface seem like active small businesses, but they are eligible for use of the program. They're also not considered special purpose properties. Ineligible businesses include nonprofits, real estate investment entities, life insurance companies, speculative businesses, and any entity that has caused a loss to the government. That includes the individuals that may own that entity. Eligible use of funds for the 504 program include any expenditure on owner-occupied real estate and equipment. For real estate, we can finance the acquisition of land, construction, the purchase of an existing building, expansion or renovation of a building, including leasehold improvements. Furniture and equipment is eligible for the 504 program, and we can also include related soft costs such as professional fees, the cost of the appraisal and the environmental reporting, interest expense that's paid during the interim financing period. We can also do debt refinance in conjunction with an expansion, and that refinance can be up to 50% of the new money involved with the project. So if you have a $1 million expansion and the borrower has an existing $500,000 loan against that asset, we can roll those together into a new 504 project for the expansion. We can also do standalone debt refinance, which we'll cover in a separate segment later. EPC, or eligible passive company, is the SBA term for a real estate holding company. It's possible to use the 504 program to finance a change of ownership between owners of an existing eligible passive company. There are a few key things that need to keep in mind. The eligible passive company must have owned the project real estate for at least 36 months. The assets must be limited to the real estate or the fixed assets that are being leased to an eligible operating company. EPC ineligible assets, such as escrow accounts, replacement of reserves, must be excluded from the 504 project financing. And the real estate being transferred must have a remaining useful life of 20 years, or weighted average remaining useful life of 10 to 20 years for mixed collateral properties. If you have a project involving a partial change of ownership, it's best to contact your WBD loan officer to talk through the mechanics. A few important clarifications about an operating company versus an eligible passive company or landlord entity. When we're looking at the 504 program, it can only finance owner-occupied real estate. For the acquisition of an existing building, that requires that the borrower, the operating company, occupy at least 51% of the usable space. For new construction projects, the operating company must occupy at least 60% of the usable space on day one, with plans to occupy a portion of a remaining 20% in the short term, typically within 3 years. The final 20% of the usable space can be leased long term. When I say usable space, there are instances where we can count non-buildings, such as storage yards, etc., that are used in the course of business. If you have a question about usable space, contact your WBD loan officer. One important restriction that we need to be clear about is the limitation on lease payments between an eligible passive company and an operating company. If the lease is triple net, typically the lease payments need to be equal to the loan payments that the EPC has on the 504 project structure. If it's not a triple net lease from the operating company to the EPC, then we can estimate loan payments that would include costs that the EPC also has to incur. Such examples of direct expenses for the EPC may include property taxes, insurance, or routine maintenance. Typically, we'll see triple net leases, so again, the lease payments have to be equal to the loan payments. Collateral requirements for an SBA 504 loan include a second lien or mortgage position on the assets being financed, the unlimited guarantee of any 20% or more owner of either the eligible passive company or the operating company. We try to avoid any non-project collateral, but we must require at least one unlimited personal guarantee as part of the structure. The SBA 504 loan has a $5 million maximum loan amount for all eligible cases. This includes any exposure that the applicant business or the affiliates have under any existing SBA programs. So we must count existing 504 loans, SBA 7A guaranteed dollars, and express dollars towards those limits. There are special exceptions and higher limits available for manufacturers and for projects that involve green or energy savings. The $5.5 million limit on manufacturers is per project. Manufacturers are defined as those that have a NAICS code beginning with 31, 32, or 33. We have the ability to go back again and again to do multiple 504 loans to the same manufacturer as a borrower. We have a $5.5 million per project limit for green projects. What do we mean by green projects? Well, these are projects that will reduce energy consumption by 10% or generate 10% of the project's required energy. For green projects, we have a $5.5 million limit per project and a total cap under the green program of $16.5 million. This does not count the $5 million that's available under the regular 504 program for these borrowers. So the total available is actually $21.5 million in 504 availability. You can estimate a 504 fixed rate at any point in time by consulting the base rate and adding a spread. For a 25-year debenture, you can get a good approximation of the 504 effective rate by taking the 10-year Treasury and adding 2.15%. For a 20-year debenture, take the 10-year Treasury and add 2.05%. And for a 10-year debenture, consult the 5-year Treasury and add 2.5%. There are two types of origination fees with the 504 program. The debenture origination fees total 2.65% of our loan, plus a flat $2,500, which is earmarked for our attorney to draft the documents. These fees are added to the net debenture and are financed over the life of the loan. There's also a third-party lender origination fee, which is equal to 0.5% of the third-party lender's first mortgage amount. This fee is typically passed on to the borrower and may be included in the 504 financing if it's presented as an interim financing fee. When you compare a 504 loan structure to an SBA 7A loan structure, the lines cross in terms of equal origination fees with a total project of about $300,000. So for a project of over $300,000, the 504 becomes increasingly more cost-effective. For a project of less than $300,000, the 7A carries lower origination fees as a percentage of the total project. The borrower's loan servicing fee is just north of 1%. This fee is paid on an ongoing basis to the SBA to keep their guarantee in place. And it's what helped to keep the 504 program as a zero-subsidy program, not funded by U.S. taxpayers, but rather funded by the fees associated with the program. This 1% ongoing servicing fee is included in the 504 effective rate that we publish on a monthly basis. It is not an additional fee paid by the borrower or lender. The prepayment penalties on 504 loans of 20 and 25 years are in place for the first 10 years, and they reduce each year. The first year, the prepayment penalty is the note balance times the coupon rate times 100%. The next year, it's the note balance times the coupon rate times 90%, and so forth, until after 10 years, the prepayment penalty is gone. Since this is bond financing, no partial prepayment on the bond is allowed throughout the term of the loan. The choice is either to make the required monthly payment or pay the bond off in full with applicable prepayment penalty. For 10-year equipment 504 projects, the prepayment penalty runs off in 5 years. The first year, it's the note balance times the rate times 100%. The second year, note balance times rate times 80%, and so forth. After 5 years, the prepayment penalty is gone on a 10-year debenture. For more information on process, forms, and applications, please visit our website at wbd.org.